Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The Insolvency and Bankruptcy Code, or the IBC as it is popularly called, was put in place with much hype and fanfare by the government in 2016, and it has now been 5 years of a roller coaster ride for this landmark initiative. It was meant to be a huge reform after the utter failure of the likes of SICA, BIFR, DRT, SURFACI, CDR, etc. to provide a time-bound framework for the resolution of bad loans and stressed assets in India. At its launch, a senior BJP minister known for his sycophancy called it the panacea, the cure-all for India's giant NPA crisis. And going by this hype and these tall claims of the government, the IBC, according to us, has been more of a disappointment than a success. The NPA crisis remains unresolved. Cases are mounting before the NCLT, and of the 4,541 IBC cases admitted by the NCLT so far, a mere 396 have been closed by resolution. A large number, which is 1,349 cases, could not be resolved and have resulted in liquidation of the company, thus giving very little recovery to the creditors and the lenders to that company. And 1,682 cases are currently in process, defying the now mandatory timeline of 330 days for their resolution. The big ones that were initially resolved were primarily in the steel and metal segment, and they got resolved only because the steel prices were then shooting up and existing players like the Tatas, the Jindals, the Mittals, etc. were keen to rapidly ramp up and build capacity to profit from the cyclical buoyancy of the industry at that time, and they thus were interested takers for those defaulting companies and their assets. The IBC was certainly meant to be a mega reform. It was expected to comprehensively tackle India's corporate loan sickness and unshackle banks crippled by the mounting pile of bad loans. The ground realities were, however, ignored, and it therefore promised to recover NPAs within an initial period of 180 days, notwithstanding a number of ground realities. It ignored the fact that influential and rich defaulters rule the system. It ignored the fact that crony capitalists had cornered loans and merrily defaulted on the loan repayment. It ignored the fact that corrupt bankers gave reckless loans that hampered the recovery. And the most important thing that it ignored was that the fraud defaulted billionaires who had siphoned away tens of thousands of crores of bank loans and public money now had the deepest of pockets to engage the biggest of lawyers and challenge the very recovery of the loans that they took and defaulted on. And we saw that happening particularly in the case of SR Steel. And finally, it ignored how could a time-bound order be ever expected from India's slow-moving and uncertain judiciary that such a timeline of a few months was set for the resolution of IBC cases. Not surprisingly, even under the IBC, the influential willful defaulters were gaming the NCLT to secure enormous haircuts to get favorable one-time settlements and take back their businesses despite their big frauds and big defaults. The fact that there have been 6 major amendments to the IBC code in the past 5 years only shows that the IBC is still struggling to find its feet and that its teething period, its decision period is far from being over. Even though the IBC has chastened promoters and has a much better track record in the matter of recovery of loans than its preceding legislations, it still struggles with issues which are quite a number. It struggles with issues like massive delays at the NCLT, as we saw in the case of SR Steel and many others. It still struggles with the sheer lack of court capacity to deal with the growing number of cases, as is evident from the dozens of unfilled vacancies of the NCLT judges. It is hampered by the dubious conduct and decisions of the resolution professionals, or RPs as they are called, and of the Committee of Creditors, the COC as it is called, as we saw in the case of Bharti Shipyard, Jet Airways and Videocon. There has been asymmetry in sharing of information about stressed assets, thus showing collusion between the lenders and the ones who are buying the companies, as we have seen in the case of Alok Industries and Videocon. The NCLT has given huge haircuts and discounts, as we saw in the latest case of Videocon and many others. It struggles with defaulters blatantly gaming the system to their own advantage, as we saw in the case of Siva Industries. There has been collusion between the lenders and the potential buyers, as we saw in the case of Vedanta in Videocon's case. The over-empowered resolution professionals, the opacity in liquidation process, and all those processes are other shortcomings of the IBC that we have been seeing. Just the massive haircuts like over 95% as in the case of Videocon and over 90% as in the case of Siva Industries, etc. show that even under the IBC, the defaulters are ruling the roost. They rule the roost under the earlier legislations, and that seems to have not changed very much for them, even under the IBC, if you go by their settlements and the huge haircuts that they take away. The chairperson of the Insolvency and Bankruptcy Code of India, the IBC regulator, however, defends the IBC track record to say that the IBC is not a panacea for all ills and that its performance requires a systematic and holistic assessment. The panacea term was given by a BJP minister, and that has stuck to the IBC. The chairperson of IBBI emphasizes the efficacy of the IBC to resolve NPA cases to say that companies having 70% of the total distressed assets as were referred under the IBC have been rescued so far, and only the balance 30% have gone into liquidation. Mr. Sahu, the IBBI chairman, further says that 2/3 of the companies were anyway defunct when they entered the IBC process before the NCLT, and that these firms have been liquidated, and these very firms, he points out, had just got about 6% assets against their total liabilities, to point out that the liquidation in their cases was inevitable, and so was the poor recovery. He also says that while the assets available were just 22% of the dues in the cases that have been resolved so far, yet he points out that the recovery was much more, and thus the average haircut stands at 61% so far instead of 70%, which it should have been in these cases. He says that instead of blaming the government, everyone should be responsible and must play their part effectively under the IBC and not ask the government to find a solution for what he calls a market problem. All market participants should effectively play their role as required under the IBC in order to make it more effective and deliver what it is meant to. The main criticism of the IBC stems from its ambitious promise of a time-bound resolution of NPA cases. The criticism comes from the huge haircuts at which loans have been settled under it, the latest shocker being the 95.5% haircut accepted by the banks in the takeover of Videocon by the Vedanta Group. And of course, it is criticized because of the dubious conduct of the over-empowered resolution professionals and the committee of creditors, whose questionable decisions do not even get rejected by the NCLT, citing judicial wisdom, as we particularly saw in the case of Siva Industries. The reasons for the numerous shortcomings and failure of the NCLT to resolve cases in a time-bound manner and ensure the best possible recovery for the lenders are many. Let's discuss them. The first reason, the poor recovery and massive haircuts are often due to the corrupt and reckless lending that took place by banks, where loans should not have been even given in the way they were given in the first place. These kind of loans, of course, are very difficult to recover. The IBC does a post-mortem job, and it cannot be blamed for the poor recovery if the defaulting company just did not have the assets against the loans given, which is what the bankers have done by giving these negligent, reckless loans. The NCLT rightly observed in the case of Videocon that it was surprised with the manner in which the financial institutions even came forward to give loans to a sinking ship like Videocon. In such cases, where there are simply no assets against loan given, then it is the reckless, incompetent, corrupt and negligent bankers to blame for the poor recovery and not the IBC or the NCLT. And that is what it was in cases even like Siva Industries and others, where there were very little assets against the total exposure of the banks. What would the IBC do or the NCLT do in such a case? The second reason, companies and businesses in sectors like telecom, coal mining, power and road have often collapsed due to government policy swings. A business failure and bankruptcy due to sudden changes in the government policy, or where the government reneges on its own promises, or it fails to make timely payments to the party concerned, or it changes its policies overnight, are always difficult to resolve in a time-bound manner, and the recovery too tends to be poor, as we are seeing in the case of power sector companies. The next, the NCLT should not approve blatant settlements merely because the committee of creditors may have approved it. In the case of Videocon again, the NCLT was surprised by the settlement proposal put forward by the bankers, but it yet approved it with an over 95% haircut to the bankers and the lenders. That also happened in the case of the settlement of Siva Industries recently, where the haircut was over 90%. The NCLT remains a mute spectator, citing judicial wisdom, which needs to be changed. The fourth reason, the glaring misconduct of hugely empowered resolution professionals who have themselves looted a bankrupt company by levying heavy professional fees, etc., and also the apparent collusion between the lenders and the borrowers has also given a big setback to the IBC process. That explains why the Insolvency and Bankruptcy Board of India has proposed a stringent code of conduct for the Committee of Creditors to prevent further malpractices by them. There is certainly a need to make the resolution professionals and the Committee of Creditors much more accountable if the IBC process is to succeed. A stringent ethics code and a code of conduct is a must for them, even though they have been resisting and objecting to it. The NCLT must maintain the sanctity of the mandatory timeline to resolve cases, and it must therefore not permit any unnecessary interruptions, frivolous litigation and delay tactics, etc., in case we want the IBC to succeed. The NCLT judges cannot be lenient, and their decisions must be upheld by the appellate authorities to maintain the efficacy and effectiveness of the IBC, has been the next reason why the entire court has been struggling. The public sector banks need to change their appraisal and valuation methods and mindset for resolving cases with a maximum recovery is the next factor. If cases are to be resolved with the maximum recovery within the minimum time, then criminal proceedings against the promoters in the case of willful default and recovery action against them to enforce personal guarantees and action by agencies like the Enforcement Directorate and the CBI must take place simultaneously together with the IBC proceedings at the NCLT in case we want better recovery and better action under the IBC code. It is only when these defaulters are attacked on all fronts by all agencies, particularly the criminal agencies, that there will be maximum recovery within the minimum time, which is what the target is of the IBC code. And finally, the NCLT needs suitably qualified and experienced judges to tackle such cases, and all the vacancies must be immediately filled up to ensure the success of the IBC in the manner in which it was envisaged. The fact of the matter is that the IBC was indeed meant to be a big reform, but it continues to struggle to deliver what was promised. Unless the government and the judiciary are not determined to ensure its success, the rich, dubious defaulters, the negligent and corrupt bankers who gave loans to them and are very eager to see that the IBC process is defeated, and the legendary lethargy in India's judicial system will together ensure that the IBC truly fails to take off the way it was meant to. And that's where the real challenges lie. This is Akhilesh Bhargava signing off till we meet again. Namaskar.